Technical analysis is the use of historical market data to predict future price movements. It involves insights from market psychology, behavioral economics, and quantitative analysis. Technical analysis attempts to predict future price movements, providing traders with the information needed to make a profit. Traders apply technical analysis tools to charts in order to identify entry and exit points for potential trades. Most technical analysis is focused on determining whether or not a current trend will continue, and if not, when it will reverse. Technical analysts use a variety of strategies to interpret price action in a stock. The technical analysis of stocks and trends has been used for hundreds of years. It owes heavily to early analysts and was formalized in 1948 with the publishing of Technical Analysis of Stock Trends by Robert D. Edwards and John McGee. The core principle underlying technical analysis is that the market price reflects all available information that could impact a market. The two major types of technical analysis are chart patterns and technical indicators. Technical analysis and fundamental analysis are the two big factions in finance. Technical analysis lends itself to a faster investing pace, whereas fundamental analysis. Thank you.